Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you as always. Got a lot to get to on today's show. We have some macro news from China. They lowered their GDP overnight. That could be weighing on the markets a little bit here, but we have retail up this morning. Thank you very much. Target and Kohl's earnings. We also have some potential activist activity in L brand. So we'll talk about all that and more on the retail side. On the drug side of the market, the painkillers were all weak yesterday. Painkilling drugs on the news that Purdue may be filing for Chapter 11. So we'll talk about weakness in the drug stocks. And today's guest will be Gil Morales, author of the Gilmo Report and managing director of MoKa Investors. He will join the show at 8:35. Joel, what's the word here in the overnight session?
We took a look at 2,800, turned back at 27.99. That stands as your pre-market high. That's a level to get through to get back up. Well, Monday's high way up at 28.19.17, but a little bit of a wall forming again here at 2,800. Pre-market low 85.25. Nothing there. We're looking at mid-range in your close, 91.5. So staying green, good for the market this morning. Yesterday's low way down at 67.50. I don't know how the heck we got down there, but some 25 points off it now. Crude in the green by 18 cents at 56.77, backing off that resistance at the 57.50 area. Gold continues its slide here for the 1, 2, 3, 4, 5, 6, 7th day in a row, but you do have the possibility of a double bottom. Let's keep an eye on the low from yesterday at 83.80. Your current low for the day is at 84.30. Silver up a penny here at 15.11.5. And just a quiet over the last couple hours or so, Dennis. But there was some action after hours. Where do you want to go with some after hours earnings?
Give me the Bitcoin quote. I had a dream last night that Bitcoin rallied $1,000. Did it really do that?
No, you didn't.
Yeah, it did. I jumped. That was like 4,500 now. Where is it?
Well, it's up $42.50. This would be the SIBO futures.
Maybe it was like a premonition, is what I'm saying.
Well, then let's.
Where is Bitcoin? Where's the price? Where is it? I have no idea.
3,700.
Oh, so I'm only $800 off. My dream said it was 4,500, so I have to watch it now. Maybe I'm dreaming these things up. I don't think I can make calls in my dreams though. So, what's the chart look like? I haven't even seen a Bitcoin. Do you have
4,000. 4,000.
4,000 like the major resistance point.
Yep. Whether it's cash, futures, ETFs. I mean, the GBTC is a lower, that's like a $9-10 issue. But until you go through 4,000, there is pressure on Bitcoin to the downside.
Number.
Yep.
That's the number that you gotta get through. Okay. This day, it's a mixed day, first of all. And whenever you see the S&P trading flat, you know it's going to be a mixed day. But we got some stocks trading higher and some stocks trading lower. The stocks that are stronger are your retailers. They're led by two companies who reported this morning, both good numbers here, Target and Kohl's. Let's do them together, Spencer, and we'll break down this retail rally.
All right, I'll do Target first here. There this morning, Target Q4 EPS $1.53 versus $1.52 estimate sales of $22.98 versus $22.96 billion. So a slight beat on both those numbers for the Q4. The guidance was good too. The Q1 EPS guidance was in line. The fiscal year EPS guidance was a beat. The range they gave $5.75 to $6.05 versus a $5.61 estimate. So good fiscal year EPS guidance on top of essentially in line or slight beats on everything else for Target. So there are your TGT numbers And I'll do Kohl's as well this morning. Q4 adjusted EPS $2.24 versus a $2.18 estimate, so a beat there. Sales was a beat as well, 6.82 versus $6.58 billion, so a lot of numbers there. So beats for Kohl's on the EPS and the sales. The EPS, the guidance for them was strong, and they are raising their quarterly dividend from 61 cents a share to 67 cents a share. So essentially, great news, good or great news all around for Target and Kohl's.
And both stocks getting a nice lift here in the pre-market. Target feels a little bit overdone to me, but trading up $4.50 here. I don't know where the highs were. I haven't been tracking it. I will say, though, you're in an area where you came down through very quickly. So just to say it's going to stop at 77.36, difficult to say because you really don't have much until the $80 level. How high do we get here on these initial numbers, Joel?
Target, you just had
the French version.
Yeah, 77.66, but I mean, you could call that $80 area, and I see a gap fill at 77.56.
So it's filled it now.
Yeah, so I mean, I just have to call that resistance. I just don't think it's going to $80 today. You got the gap fill. Yeah. Maybe you'll get through it a little bit. 80.40 was the high on that day. That was the day before earnings. So I just have to respect that gap fill. It's taken a long time to do it. So use that as resistance. I mean, if you take off and you go 77.5, 78, you keep on going and then you fall back down through that 77.5 area, maybe that would be the way to play it if so inclined. But man, oh man, that's what I'm looking at. And then lo and behold, Kohl's has the same kind of formation. Yeah. Their gap fill takes it to 70.55. So pretty simple technical analysis.
And lots of resistance at Kohl's in this $70 area. So I'm not surprised Kohl's is stalling out right below 70. Just looking at it, it's a little bit more of a, not say simpler setup, but more defined, where you can see multiple highs in the 70 area. I don't see much in Target. So I'm going to sit on hands trade. I know in Walmart, and some people are going to argue this, Walmart had pretty good numbers, gave it back in 2 days. Target has pretty good numbers. Could it give it back? It could, but it's got room to 82. So I look at it at 77. I think, okay, well, there's, a rally. This could rally another $3. It could end up falling $3. So I just don't have a good feel for this one. So I'm sitting on my hands. Yes, OH trade on Target. No trade for me on this one. Kohl's interested in fading the rally just because so many tops there at 70, 71. But again, it's tricky. And, I'm just going to take you on a segue here. It's tricky to just, be fading rallies, because how do you control the risk? I mean, I called it yesterday, EA, on the show live. Saying 101, 102, and I was pretty convicted with the call saying, I think this, is a gift. I think it's going to give it back, and I'm actually would be paying it from the short side. I didn't though, because, it's rallying, it's up $3-4, and obviously, it's really in rocket ship mode, and then just starts getting back, goes down 100, and then you're like trying to hope you're going to get back to 101, but it just continues to leak. So it's hard to short them when they're going straight up, but then sometimes they turn so quickly that you don't even get a chance to get the short on, even though you made the right call. So sometimes it's all about execution, and it's just tricky sometimes to control the risk on the ones that are going straight up. I mean, the gap was the same thing too. We were fading that and saying, on the show, I would fade that, as a paper trade, like, as a call on the show. But, I'm looking to execute and put it on. And it's tricky because the thing's 31 and then it goes to 32. And it's like, okay, well, it's in full rocket ship mode. I do think it's going to give it back, but where's the top? So those are some of the hardest trades. They're some of the best, best rewards, because you see how quickly the gap has given it back. And logic, was saying that to fade that move. And if I was long, I would be fading that move all day and just getting the hell out. But sometimes it's tricky to initiate a short when you don't have that much to lean on.
Especially in the after hours or
pre-market. Stuff just flying. It's tricky.
Yeah, but
it's easy to say, on the show, it's like, okay, I'd be fading this and get it right, and sometimes you're going to get them wrong too, but to actually execute and get and take the heat of the trade, because, when we were saying that the gap was rallying up, it was around in the lower 31s and it rallied to 32, you would have taken a little bit of heat than the after hours session, or in the pre-market session, but you come back down here and now in 2 days you've given it all back. I mean, sometimes you just got to think, from a logic perspective, does it really make sense that, okay, we're spinning off Old Navy, but we had some pretty bad numbers on the conference call on the gap. They were basically warning. I mean, they didn't say anything good about, the legacy company, And, we know they have some other brands there too with Banana Republic and whatever the hell else they got. But Old Navy's been their star for a while. So they're spinning off their star and they get the 20% pop or 25% pop at one time. But really, when the dust settles here, is this turning the company around? All of those other brands? Probably not. And I think the market 2 days later gives its head a shake and saying, yeah, pretty silly to be trading up at 32 on this. And now it's trading at 27.
Gordon Gecko wants to thank you for the EA short yesterday.
Did he get it? Nice. Gordon, better than I did. Because I wanted a short and I did not get it. So I'm glad somebody made money on it when I was saying, I said it a couple times. I'm like, I'm so convicted on this. I wanted to short it. And I was doing the show live and literally, and I was saying, if this gets anywhere 101, 102, I want to short the open. Well, at the open, it never got.
Yeah, close to this.
Because it opened at like 98.31. It opened 4 points down from where it was trading in the pre-market just half an hour earlier, and then it came right in. So one thing I will say on EA and the caution of the longs is just imagine they come out and you saw the 50 million number. That was good. Was it 50 million, Spencer, the number yesterday? Do you remember? Can you go to the pro and just verify that?
Yup, it was 50.
Yeah, so just careful because if they come out with a metric and that growth starts to decline or potentially goes down, and they come out, in another couple of weeks and they only got 40 million players, they'll crush that stock.
That's not going to happen.
So it probably won't happen. Well, how do you know? Anything can happen. I mean, you can always say it won't happen, but you just gotta. I mean, it's not going to continue to just grow. There's not be like 500 million people playing this, is there? How many people play Fortnite at the peak? There's a question for you.
I'm actually looking up right now.
At the peak, like when it was really going, how many people were,
Oh wow, I have no idea on that one. But
there's only so many gamers out there. I mean, you're not going to get people like me and Joel, so there's only so many.
Why not?
It's like,
Why,
do you know what it was?
Why not you and Joel? Yeah. So by June 2018, Fortnite had 125 million players. They had, as of yesterday, have more than 200 million. Let me see. But
so it's continued to go up.
But the pace,
Fortnite.
of Apex Legends has.
That's the worry for me. The pace of the growth. Are you flying up and going to get to those Fortnite levels? I don't think so.
At this point Apex has been out for a month now? 3 weeks, a month?
Not even.
And at this point, Fortnite had like 15 million. So
it's going faster.
And Apex
than
is at 50.
Fortnite did originally.
Yes.
But the way they're trading the stock is, and obviously, they popped it 3 times we've seen on those big numbers. Obviously, the initial pop continued to go, but the second time they came out with the increase, they popped and dropped it. Third time they came out with the increase, which is why I said it yesterday, they popped and dropped it. So you're starting to see where it's not holding on. And we know there's, other issues here, obviously, with Electronic Arts as well. So this game has been kind of the savior, so it's all about this game. But that growth rate starts to slow down significantly. Look out below. So just caution there on EA. I still like the stock in the lower 90s. I'm 96 here now. I sold 106 when I sold my long that I had on, and I am looking to rebuy it. But we'll see. I'm still just in watch mode on EA.
You basically had a 30-point move in that, and so if you take half of that, that's the $92, $93 area for the 50% retracement. But I'm keeping a real close eye on 95 here. Your last 3 lows: 95.67, 95.31, 95.57. Tight ranges over the last couple of days. I think you got a little trap door there if you fall under 95 in EA.
Let's jump back over to the earnings parade and go to the tech stocks from last night. Take us to the cloud and Salesforce.com CRM.
CRM reporting yesterday after the bell. Q4 adjusted EPS of 70 cents versus a 55-cent estimate there. Sales 3.6 versus $3.56 billion. So a beat on the EPS and the sales in the quarter. The guidance that they gave a little bit light by a couple cents on the EPS. Nothing horrible though. The sales guidance for the quarter was also a smidge light. The fiscal year EPS guidance was in line. The fiscal year sales guidance was in line. So essentially in line guidance and just a hair light on the EPS or on the Q1 guidance, but that's not a bad report.
Not a bad report, but again, stock kind of priced for perfection. The reason the stock is down because it had a rough day coming into the numbers. We know everything got hit yesterday, and you have everybody who basically didn't sell in the 160s, taking the opportunity when the stock had the initial pop to sell in the 160s. I was talking, well, I didn't talk about this. I actually was trying to trade this from the short side on the pop. I had my order out there, and it was such a little rip your face off rally in the first 2-3 minutes that I got scared. I canceled, and then I put the order back out there, and it was too late. So sometimes you just got to be willing to take a little bit of heat, leaving your order out there. I think I was selling at 161 was my short sale, or 169. I always like to price under the big whole numbers. And it was coming up so fast, I canceled it, and I was like, oh, and I shouldn't have canceled it because it went up to 162. I would have taken some heat, but literally 5 minutes later, it was trading like 155. And I was like, I called it. And when you see these things, these are the setups here. So when you see something have a bad day, and then all of a sudden the earnings take us back up and get us not quite to the highs, but get a lot of those losses back, that's usually going to be a selling opportunity. Not always. Nothing works 100% of the time in trading, but it often works, and if it works more than, 55% of the time, it's an edge. And I already had that in my head that, a lot of people had a bad day with this. If this thing does rally on the initial numbers, and I mean, if they were really, really blown it away, maybe it'd been different. Maybe it could continue to go. But usually when you see the things get hit ahead and then they rally, there's a lot of people who are caught from maybe yesterday, the day before, maybe banking that was going to be higher, and they're going to use that opportunity to lighten up. And that's exactly what you saw. The sellers come in, the stock tanks and goes all the way down to the 153 handle. It has rallied since. It's only down $1.50, so holding on. And Salesforce.com has still got a story. It's still a love stock. I still think there's buyers beneath here, but tricky. You had a pretty good run. It's been 120. It was back on the December 24th lows, and now you're sitting stock at 157. So it's had a good run.
Yeah, and made its all-time high 2 days ago at 166.15. I was looking at that red candle yesterday as well. So the street kind of leading the right way into this report, or some. I mean, obviously there were buyers too. We did get to 162.98, and now we're creeping back up at the highs since you made that pre-market low. 51, 51, 55, and now you're back at 157. So for me, my number would be the close. See if they can get this thing over the close of 158.50. Then greener skies ahead. If you can't, if you can't clear that close, maybe back and fill here a little bit. Someone asked if they thought that this was a similar candidate to what Square did. And the only reason I would say no, I mean, it definitely can, is that Square was considerably off its all-time high, right? Even though it had had a big rally, it had come back, and there was a point here. This is so close to the all-time high that I don't think it's as good a candidate. And of course, everything can happen, but that's just my opinion.
I mean, the Square trade was so interesting because it got hit and then it rallied all the way back up. We know it was trading down at like 73 or 74 on the pre-market the day after earnings. And then it rallied all the way up to make new highs on the move, all the way up to 82.78. And then 2 bad days takes us all the way back down to those lows. It was just, a little bit of market effects yesterday with Square because they were hitting everything with a higher PE yesterday. I mean, except for FANG, which, Amazon was up significantly, but there was some news on that. For the most part, they were hitting a lot of higher growth names yesterday. Does that trend continue here today? That's a question too. I don't know. It's not because we rallied off those lows so much. The buy the dippers were already lurking, and they're still lurking in so many stocks. I just don't think we're going straight back down. I don't think we're going to have these days where we're down 500-600. Not yet. There's not enough fear out there. The only fear I still sense out there is the FOMO, the fear of missing out. And until you start getting, another headline, or, and everybody, and the shorts are nervous too. I mean, there's a trade deal coming here eventually. So they're nervous too. People are scared to be short. So it's a tricky market to trade here right now. We've had a significant rally. We're up 11% on the S&Ps here for the year, which is a pretty darn good year for the whole year. And we're only in 2 months in. So, and you're bumping your head up. You were making a good point on stocks and jocks this morning. I was listening to you, Joel. At this level on the S&Ps, I mean, talk about that level.
Yeah, you can bring up the S&Ps, or you can bring up the spider. I mean, this has just been a really key area in the market, not only for where we're trading at now, but the spider S&Ps bumped their head against this area here in mid-October. We bumped our head against it in early November. Once again, before we fell off a cliff in December, that was the same area. So you have found resistance there. I mean, there's a lot of different ways you can look at it. This is like the fourth or fifth time trying to pierce through this area, and there's no such thing as a quadruple top, but it's where you found resistance before. Big move, from the beginning of the year. It's just a digestion, but as you said, just so many people underinvested. You get these declines here, and
they're going to be coming in. Yeah, I'm going to be one of them coming in because I'm underinvested right now too. So I'll be looking, for the dips to buy on certain stocks as well. You know what I think could happen here, and this would be a longer term thing, but I think we could chop around here for a while. And if you chopped around here for the better part of let's say a few weeks or even a month, let's say we chop around for a while, maybe we get a trade deal, we get a rally, and we get, you kind of could get like a reverse head and shoulders starting to form. Because I'm looking at that chart you're showing right now, and it's a nice chart, Spencer. You're looking at the real long term, but you can see like a whole potential, and not that we're big pattern traders, but and now he takes the chart away as I'm talking about that. But if you go back to that chart, you can see the whole left shoulder kind of between, say October, November, December, when we were chopping between 260 and 280. Then the collapse, which would be, the head, because I'm talking reverse head and shoulders here, down in December. And then, you come back up and you get right back at that 280 that Joel's talking about, and it's coming to resistance. So you could come all the way down to 270, 265 even on the S&Ps, and you'd still be, that potential pattern would still be intact. So I would love to see, 100 points off in the S&Ps just to come in and buy it. And I think eventually, when the dust settles here, I think we're going to go higher, but I don't think it's going to be smooth sailing anymore. It's been smooth sailing for 2 months, and I think you're going to chop around here for a bit because this is a big battleground here, a battleground we had in October and November, and it's going to be difficult. The market's got some work to do to get through this area.
Yeah, I agree. I mean, it's resistance. You have to respect it. Do you need to sell out of your portfolio? We're hitting this area. No, but the ranges have been coming down, except for yesterday. Yesterday was the only fly in the ointment there that you finally got an expanded range day, but it really didn't end up that much to the downside in the market, and the market's climbing back today. So we'll get those multiple closes over 2,800. Your close on Friday was a high close of the move at 2,805. That is the only time we have settled over 2,800, and looks like we're going to give it another shot today.
And the other reason I'm not getting all bearish here is because, let's be honest here, those target numbers are pretty good, the Coles numbers are pretty good, but these are pretty wicked rallies. And the market wants something to buy. So when you see CRM getting hit and WB's getting hit now, and some of the techs are a little bit weaker, some of those cloud stocks are weaker from the CRM earnings, they find other reasons to buy stocks. And you're looking at Target and Kohl's, and maybe on a normal day, maybe they're not up as much on these numbers, but because this is a day that they're looking for something to buy, they're like, it's going to be retail. That's what we're going to buy here. And they come in and they start buying that. So what you're seeing here is now rotation to keep us up. And that's what we saw for basically 2 years. When the market kept, holding up and going higher, and you'd have some stocks fall off significantly, but there'd be other stocks holding us up. It was a rotation that was always keeping us higher. And we're starting to see that again. We did not see that in December. It was a sell everything market in December where rotation wasn't keeping us higher, but we are seeing that again here now. So as long as you keep money keeps rotating in between sectors and not leaving the market altogether, the market is probably going to stay higher. So I still think we go higher here. I think we might be at all-time highs by the, maybe even by the summer, but I'm a buyer of pullback, so I'm keeping the bull hat on here. But I think we're due, and I'm hoping for a little bit of a correction just to redeploy some of my capital that I put on the sidelines.
All right, let's 824 here. S&P's just bounced off unchanged there. So there's your bogey, 91.50. That was your close, back up at 94.50. Target working its way into that gap area I talked about, trading up 496 and 77.63, and Cole was working its way back up to that area as well. So
they're holding up. I'm not fading these, even though part of me wants to. I'm not fading these. Hard to control the risk. So, okay, we had a couple other stocks reported. HUYA, our chat loves trading this one. I like trading this one too, and I usually trade with IQ. But you had a whole bunch of Chinese stocks report here, though. Because you had HUYA and YY report last night, and they were really good. And those stocks were trading significantly higher and bringing up a lot of the other Chinese stocks too. But then this morning, WB poo-pooing on them a little bit, along with SINA. and they're disappointing. So now you're seeing the other ones that didn't disappoint kind of trying to get direction here. Like if you look like an IQ, which was lifting off HUYA earlier, now it's kind of just back to flat because you got WB and a couple other Chinese stocks holding them back. But let's go to the HUYA and YY reports here from last night. I know they're probably in yuan, so it gets a little bit confusing when you're looking at them, but we'll throw Spencer Israel under the bus and he'll try to interpret it.
Well,
for us.
you can convert it. I think the release had it like
Did
per ADS, which is the type of share it is. So it's not super crazy. The Q4 adjusted earnings, 11 cents ADS, that beat the 9-cent estimate. Sales of 218.9 versus 212.6 million dollars. So HUYA beat on the ADS, their earnings per ADS and the sales for the quarter, and their net sales are coming in line with estimate, or a little bit light actually, with the estimate there. And that was HUYA. What else? YY.
Yeah, YY reported last night too.
Their earnings per ADS, $1.87 versus $1.84. Sales of $675 or $660 million. So same story there, a beat and a beat for YY. And we also had CTRIP. I'll keep going here. CTRIP, they were yesterday as well. They're my top gainer of the morning that I'm seeing. Their Q4 EPS, 13 cents versus a 3-cent loss estimate. Sales of 1.1 versus $1.07 billion. So big EPS beat and the sales beat for CTRIP. And might as well keep going. I'll go to SINA.
WB and SINA this morning.
I'll go to SINA and Weibo. So SINA this morning, Q4 EPS 80 cents versus a 75-cent estimate. Sales of 573 versus 569 million dollars. Those are good numbers. Their fiscal year sales guidance was in line. So good numbers on the headline from SINA and Weibo. Same story. They're essentially the same company, so the numbers are pretty correlated to each other. They beat on the EPS, they beat on the sales, and their Q4, and their guidance was in line. So
this makes it very tricky.
So basically,
because when you get a couple trading higher on earnings, a couple trading lower on earnings, it's kind of like, okay, well, give us some direction here. I mean, like I love trading IQ off of HUYA. It often does move with that. But today it's going to be having, multiple influences. So WB and SINA not helping, and HUYA helps a little bit. So who the hell knows? I have a small long in IQ, which I had from last night off the HUYA numbers. I'm now flat in that because obviously the stock, meaning that I'm not up in it because the WB and SINA poo-pooed it on me.
Wait. So here's what I would say though. I would say I just gave like 5 reports at once, and they all essentially had the same thing. They all essentially beat on the earnings and came in line or a little bit better with the guidance. So find the leader. In this case, that's CTRIP, and follow the leader. What CTRIP does,
I feel like CTRIP's its own thing though, because that's kind of like I feel like it doesn't move as much with HUYA. Like here's from a pairs trading perspective. We'll talk pairs for a second here. Talk bright trading behind me because YY and WB always seem to move pretty well together. But when you have earnings, they go opposite directions. I mean, they can. So, but last night, for instance, YY reported good numbers. WB was trading way higher on that. So now they come out and maybe the numbers aren't as good as, YY or whatever, and they decide to hit it. And then you get HUY and IQ, they always trade good together. But because you got SINA, it's so confusing. I feel like CTRIP, for whatever reason, it's its own animal. I don't pair that up with anything. So, but YYWB goes good. HUYA can influence IQ, can influence Billy, BILI. And then SINA, it can do its own thing too.
SINA and Weibo are basically the same company, right? The Weibo was a spin-off of SINA, but they still own a significant chunk of the company.
Right.
So,
and if you look at the charts, I mean, they all look similar. Well, yes, it's a little bit more wild maybe, but they're all similar. So it's I'm just saying, bottom line here, it's gonna be tricky to trade anything. I'm not seeing like slam dunk setups like EA yesterday when it's rallying 5 points on the little improved numbers that they've already hit on before. Those are easier trades. There's nothing easy here.
Okay. I just Huya. This one's a little bit more interesting to me than the other ones because you made a after hours high. After hours high 27.40. Former high of the move was just from a few days ago at 26.50. That's where we're trading right now. So we hold 26.50. Yeah, let's go up and test that pre-market high. If in fact, and there was a couple other pesky highs right at like 26.18, 26.20. So have we cleared out that seller there? If so, we'll be trading quickly in the 27 handle to the pre-market high. Just to see whether or not those sellers, not yesterday, but the previous 4 or 5 days are still lurking at 26.5. Is any other? I mean, you guys just ripped through like 5 or 6 stocks. Is there any other ones that?
We've covered most of the earnings reports here now. The only other one maybe NEO. That was supposed to report. Did it report NIO? Had it on my list.
Oh,
no, it hasn't yet. I think it's.
Is it due today, Spencer? NIO?
Man, I hadn't. It wasn't on my list. Let me look again though. Do I see NEO here scheduled for? Yeah,
I thought they were supposed to be today.
They are.
And I haven't seen anything happening there, and that can be a wild one too.
They're scheduled for today, so.
Yeah, I think it's after the close is what I know. I was digging too, and I kept on moving it.
I have it written down as pre-market, but I may be wrong.
No, well, it's a Chinese company, so it could be. Well, their day's already over, so it should be out soon. I think it's after the close.
All right. Well, in any case, we had Huya, we had YY, we both SINA, CTRIP. I think we got the big 5, at least of this group. But so how's IQ trading? So let's look at IQ.
It traded up initially on HUYA. It was trading up over $27.
Neutral third party here. They don't have any news today.
And it's pulled down here because you got the other Chinese stocks weighing on it. So like I said, BILI and IQ are getting tugged in 2 directions here, and they're trying to figure out which way they want to go. So. Tricky trading for pairs traders.
Tricky for pairs trading those Chinese ETF off earnings. I mean, who thinks that would be difficult, Dennis?
Spencer says NIO
7 p.m. tonight.
All 7 p.m. tonight. So
okay. All right.
Jump over here. Also, we're going to get some more retailers tonight. I'm going to go to those in a second. We only got 2 minutes here. I'm going to give you a quick look at imbalances before where you go to our guest. General Electric, 100,000 to buy, somewhat significant, but geez, so big. It's 100,000. Can get shoot up in a hurry. Bank of America, 120,000 to sell. BAC, man, these imbalances. You get these mixed days, and it's just really tough. One that does stand out to me is Alibaba. Baba has 92,000 to sell. That's significant there. If you look at the trading action from 8:30, you can see the stock went straight down when that imbalance came out. So you can't tell me those numbers don't influence them. They do. When they come out at 8:30, they influence that. 92,000 shares to sell. Baba's been on fire. I still own it in a long-term portfolio. It's been a monster move. $130 start of the year. It's 187. I mean, at a certain point in time, I feel like I should just ring the register just because it went up so much so fast. I mean, I thought eventually this could get back to 200. I didn't think it was going to do it in 2 months.
Yeah, nice move. They did knock it down off that selling balance here. Just holding up, made a new high for the move yesterday. So one little selling balance. Just be careful because remember the day after Square had their earnings, that got hit with a couple big selling balances. Traders got caught on those right away. So if you're fading that selling balance or to go long.
Yeah.
Make sure it goes quick. If you're doing it to cover short, it's a different story.
It suckers people in. So you have, professional traders that'll look at that and say, oh, the market's trading higher. A lot of Chinese stocks are trading, higher. There's a couple obviously that aren't. But I mean, if you look at the EEM, it's trading higher. So overall, Chinese stocks are up here this morning. FXI you can look at too is maybe a better indicator, but it's trading up there too, 44.61. So you logically think that Alibaba is going to be trading higher. So you've caught a few people already who, maybe buying it ahead of, 8:30 imbalance number comes out. Now it gets hit. So now you have a few people caught already. And then you have people saying, well, it's going to come back because everything else in Baba's back. Well, anything that, is obvious like that tends to get overcrowded with day traders, which means it can have a washout afterwards. So maybe Alibaba opens down and then has the initial washout to shake everybody out. And sometimes there's going to be some follow through here too. Baba has been on a hell of a run. I mean, if you're coming in here and buying it now, you're so late to the party. I mean, it's up 57 points here this year. So on a $130 stock. So you're talking about a stock that is up 50% this year in 2 months. And it's a big stock. That's a huge move. I mean, that's a couple years of gains there in a couple months. So if you're coming and buying Alibaba now, you are so late to the party. So I think it's due for a healthy. I'm talking against my book because I still own it here right now. But I'm itching here now to maybe lighten up or get rid of it altogether because it's just ran so far so fast.
And it's bumping up against its August high.
You start getting it where it's 200, 190s. I mean, what's your upside here now? I mean, I don't think it's going to blow through everything and start making new all-time highs. And maybe it does, but I mean, the all-time high on Alibaba is 211. Is that right? 211.70?
I have the all-time high in the box. Yep, 211.70.
Yeah, so you're 24 points. So there's still some room. There's still some more meat on the bone, but it's come back so far. I mean, you got 2/3 of all the losses back from 2018, which was not a great year for Alibaba. So, I mean, I just feel like if you're coming in now, you're late to the party.
Okay, Spencer, we got a guest today.
We do. 8:35. Let's go grab our guest, Gil Morales, author of the Gilmo Report and managing director of MoKa Investors. We'll be right back in a moment here with Gil. All right, welcome back, everyone. We are now joined by Gil Morales. As I mentioned, he's the author of the Gilmo Report and managing director of MoKa Investors. Gil, how's it going this morning?
Pretty good.
Thanks for joining. Yeah, thanks for joining us, Gil. You said you were listening in before you came on the air, and we're just tussling here with the $2,800 level. The S&P's at 280 and the spider here. And we won't go up, break out above, and we certainly won't break down. How do you trade? How do you invest? How do you view these consolidation periods?
Well, the first thing I would note is that I know there's going to be a debate about, are we going to go higher from here? Are we going to go lower? Well, there's also a third potential
nowhere
path the market. Hey, just go sideways and chop along the 200-day moving average and along these November and December highs. So that's a possibility too. Now, the hot plays since the beginning of January, and these are a number of names that I mentioned to my members at the time, were all the cloud names, and they had all bottomed at that point. They've all had huge runs. And at this point, they're starting to break out. And once they break out, you take a look at Workday, for example. That had a breakout, I think, with the market earlier in January. And it basically gives up a month's worth of gains in 2 days. So all of these names have gotten extended. So what I'm looking for here is, okay, if these names correct, which I think they need to, do we rotate somewhere else? And if that's the case, then that may coincide with the market going sideways. And I don't really see much in the way of rotation. I've been thinking, the U.S.-China trade agreement, which doesn't strike me as anything substantive, but I think that's good for China. Maybe not so good for the U.S., but I've been looking maybe going to get a rotation that way, but that's been a very mixed bag. In addition, a lot of these Chinese names have already rallied off the early January, late December lows, and a couple I've already been playing have been Tencent Music, which has been a great mover, and Pinduoduo, which has been another great mover. And both these stocks seem to have moved independently of the day-to-day news regarding the U.S.-China trade talks. So that's one place I'm looking, but I think right now I'm kind of in a position where I'm just kind of hanging back and selling to some of these moves. Yesterday, I thought a number of breakdowns in the clouds. And these were interesting names because they were all moving just like one big wolf pack, almost step for step. And now you look at the last day or two, and a lot of these have broken down.
Like who?
Almost step for step.
Like who?
Pardon me? Well, Workday, Splunk, Zen, Okta, ZS, Zscaler. Let me just go through my list here.
I just want to
Five9, Atlassian, Alteryx, New Relic, HubSpot, Tableau Software, ServiceNow, Trade Desk, So these all got tagged pretty good. And that if you look at the patterns here, they've sort of changed character. Well, they haven't sort of changed character. They actually have changed character relative to their pretty steady uptrends off the lows of early January, say. And so now I think these are all going to correct, and we'll see whether this results in some sort of rotation. So I really think it's more of a wait and see game. But as things get extended, I'll sell into that strength. And I certainly don't buy breakouts anymore, because, or at least not as an initial entry, because you'll find, if you study that carefully, that breakouts don't really go anywhere. You might get a 10% move if you're lucky 20, but that's very rare, and then they come in. The strongest and the fastest, highest velocity moves that I would say have the best time value, or the highest time value, in other words, price gain per amount of time it takes to achieve that price gain, those moves come off the lows. And the undercut and rally long setup is my primary weapon when it comes to long entries in stocks, and you saw a bunch of those in early January, and you can just go through the lists. I mean, even
Do you see any of those now, Gil? Those undercut?
no,
and
I
rally?
don't. And see, that's the thing. I don't see anything pulling any kind of undercut and rally. And that's I mean, intuitively that would make sense since we're already up. I mean, it's been quite a streak. We're up 10 weeks in a row up to last week. And the other thing that I think is really interesting is that the data I'm seeing is that we've had 11 weeks straight of outflows from global equity mutual funds. So you haven't seen any reversal of that. Yet you've seen markets, the Chinese market's bottomed and trying to turn, and the U.S. market is running like gangbusters. But money hasn't started to flow back into stock mutual funds. And I'm wondering, okay, does this money just stay out, or does this become a new force to drive stocks higher? Because I've just viewed this market rally as nothing more than a QE rally. You know, the Fed, it's sort of almost a binary situation. Everybody thinks the Fed is tightening back in October, and they just sell everything, and they sell everything hard. And then once Powell changes his tune and they start talking about reaching the high end of the cycle, which is kind of a joke to me, because in the old days, the high end of the cycle might be 6-7%, and the low end of the cycle might be 3.5%. Now, the low end of the cycle is 0, and the high end is 2.5. It's sort of this Orwellian kind of world, but you know, it is what it is. So, and I think the market feeds off of this liquidity staying in there. The Fed's going to hold their balance sheet at, I think, at about 3.6 trillion with a T, and it's still there. So once the market's satisfied that Powell's got its back, it just goes. You know, it's almost like they just flip the switches on the machines, and boom, 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 you're off to the races. You know, and you'll sit there looking at some of these rallies, and they're unbelievable, but they're happening. So the only thing to do is go with them until they don't, until they stop. As Ed Secoda used to say, as you may recall, the trend is your friend until it bends at the end. And yesterday,
I like that one.
I mean, it's pretty simple. It's kind of like, well, it's an uptrend until it isn't. It's like, okay, I can go with that. That's pretty simple. So if you look at some of these cloud names, and I just look at Splunk, look at Workday. These are big leaders that were pushing everything higher, and the whole group is moving. They got clocked the last couple of days, and so I would say that's a trend that's bent. And I would be out of these, you know, once they break the 20-day line, if I'm long them, once they break the 20-day line, I'm gone and take profits and just hang back. So I'm sitting in cash right now.
Go ahead, Dennis.
I was going to say, Gil, what do you make of FANG's rally yesterday? So it's interesting because all the cloud stocks got hit. Yeah, Facebook was up, Amazon was up. It was
Netflix
actually
was up also for a little while. Nvidia was up, and you saw several of them up early in the day, but a number of them gave up the gains by the close. But it did look like money was piling into some of these bigger FANG names. Now, my theory has been these names have been dormant. You look at most of these patterns, they're fairly dormant since January. And you could see a rotation into that area, and that might drive, that would certainly drive the indexes higher, particularly the NDX and the NASDAQ. So that's one area I'm looking at. You know, other than that, okay, the semiconductors had their rally off the lows, or maybe we just go sideways and they just chop everybody around for a few weeks. I think I remember the last time we had a streak like this, I think the NASDAQ was up 8 weeks, and that was in either the early part or middle of 2016, rather. If I'm recalling this correctly, you can just check a weekly chart on the NASDAQ to see if I'm right. But I think right after that, it looked really strong, and then we went sideways for about 8 weeks. Then we went higher. So that could be one scenario. But I think as long as the Fed is on hold, and as long as we don't have any sort of fiscal or monetary or banking crisis somewhere in the world, I think we can move higher. And you know, that may confound a lot of people, but I think you'll see it in the patterns. The patterns will be there. On the other hand, if we had a real nice sharp pullback here, then that might set up some of these undercut and rally type of maneuvers that I like to buy into.
You made the comment that you thought that the deal would be better for China than the United States. Do you want to elaborate on that?
Well, yeah, because they haven't given up anything really. And, the U.S. is agreeing to hold back on the tariffs, and they're even talking about, according to what I've read about the agreement, they're going to roll back the current tariffs. So they're basically going to let them off the hook, and then China's going to buy more, foodstuffs from us, soybeans, natural gas. And I think that's the basic problem is they buy soybeans from us and we buy electronics from them, and that's where the imbalance is, right? And but I don't see that, this hard line that Trump is taking towards China has really panned out. It's been a lot of fluff, a lot of hyperbole, a lot of posturing, and all this noise about the greatest trade deal ever. This is a bunch of BS. But a lot of Trump is a bunch of BS. It's never as great as he makes it sound. Not that it's bad necessarily, but it's never that great. But hey, he's just another politician now, so what do you expect, right?
What about, are you looking at any stocks in the AI space, artificial intelligence?
Nothing that I would explicitly say is hitting my radar. One area I do like is the telecom area. So Viavi Solutions has been one name I've liked, and we pegged that as a buy on February 8th, trading at 11. Well, the high that day was 1178. It had a viable gap up after earnings and then tucked in a little bit as volume dried up. And so we put out a report on that, on virtue of selfish investing, and also in my report, Gilmo Report. And the stock's up about 20% from there. It's hanging along. The highs of this big cup formation. The high of that on the left side is 1282, and you're punching right now into the 10-day line at 1320 or and change, somewhere around there. Let's see, 1317 is a 10-day close yesterday at 1321. This 3D sensing, this is going to be a big growth area. If you listen to the Lumentum conference call when they announced earnings, I think a few weeks ago, the CEO is pretty adamant about the fact that the big growth opportunity is in 3D sensing, and they see that market expanding rapidly over the next 3 to 5 years. So, and he gave some numbers. You can go back and look at the transcript if you want. But looking around for a more pure play on this, Viavi Solutions is one stock that I've liked, and that's acted well so far. Also, Acacia, which is already up and out of there, that's another one, and it's coming off the lows of its macro pattern. I mean, the peak was way back in 2016, September 2016, when it went over 120. Now it's turning the corner here at 55.52. It's extended though, but I'm watching to see how this thing settles into the 10-day and the 20-day moving averages as they catch up to the stock. And there's also Arista Networks, and also SINA came out with earnings this morning, right? Did they?
Yes, they did.
Are they trading up? Let me check that real quick.
It's trading up about 60 cents.
So nothing spectacular, but see, it's already been running. So, I mean, a lot of these stocks, some of them are up there, some of them are just getting going. Arista Networks, that was a viable gap up 3 weeks ago, I believe, a couple weeks ago after earnings, and that's moved higher. But it's still yet to break out. And you'll notice, I mean, you can look at any of these patterns and you'll notice that the sharpest move comes off the lows. So that's where you really want to be catching these. Breakouts, I think, are quaint and, for, as I like to say it, the slow animals in the herd, because they just don't produce the same kind of upside thrust that you get coming off the lows. And I would challenge anyone to go through, pattern after pattern or chart after chart of any of the stocks that have had decent moves since early January, and you will find that they're all moves off the lows. And that is the highest acceleration in the move as it comes up the right side of its pattern, comes off of those lows. And then once they break out, everybody sees the breakout. That's technical analysis 101, and I think that becomes too obvious. And so, and I even think maybe algos fade it. There's some algo. I mean, maybe I'm a little bit too paranoid about it.
No, I think they do too.
Yeah, and there's a couple of algos hiding in my closet, and they shake, rattle, and roll all night long and scare me out of my deep slumber. But I think the machines do sometimes short into breakouts, or even I know from personal experience, when I was at William O'Neill and Company, I was head of the institutional advisory group there. And we had, when I was there, that was in its heyday, the golden age of O'Neill, I call it. And we had over 750 clients, institutional clients. And there were a lot of mutual fund managers and hedge fund managers that I ran to that, or that I talked to rather, that ran pretty large portfolios. And they told me they would create breakouts to draw in buyers and then sell into them if they wanted.
No.
Yeah. So you're being facetious, right?
I know, Gil. The last question I have for you, just along the lines of the institution. You've talked about institutional patterns here. You know, they don't get in one stock in one day or 2 days or 3 days. You know, they take weeks to work in the positions here. I mean, what do you think the institutions are doing here? I mean, you know, you got the wall.
Well, here's the rub here, Joel. I don't know who the institutions are anymore. I think a lot of them are just big banks who have easy access to money from the Fed, and they just set their algos, you know, running one way or the other. And the action seems to strike me. It's also very contrarian. You know, when things get really ugly, I mean, you can go back to my reports in early October, and we called the top. There are a lot of people call the top, you know, big deal, but you could see it coming. And at that point, of course, everybody's, oh, well, the market needs to pull back, and a good pullback would be healthy. Well, we got a lot more than that. And, you know, the guys on Fox Business and CNBC, they're telling everybody to buy all the way down. You got to buy this market. It's cheap. Everything's cheap. Buy low, sell high. In their case, buy low, sell lower. But eventually, when they start getting concerned, and that was in late December, then that's usually the bottom. And if you compare the October 2007 top in the NASDAQ to the October 2018 top in the NASDAQ, they actually track almost exactly together until we got to January, early January. And the difference is back in 2007, 2008, we didn't have QE. In 2018, 2019, we do. And I think that's really the difference, and why the market this time around dovetailed, or didn't dovetail, but rather veered away from what it did back in early 2008 when we topped and went into the financial crisis bear market, as it was known.
Gil Morales is the author of the Gilmo Report, managing director of MoKa Investors. Always a pleasure to talk to you, Gil. Thanks for joining us today. Have a good one.
Sure thing. Thank you. Take care.
All right. 8:51 now in the markets. Joel, anything of note in the S&P?
No, not so much. We're just got a nice bounce off the close. I would just mention here, we did talk about Target and getting up into that gap area that you had from its last earnings report. That gap fill was at 77.56. You hit just a tad above that here. You went to 77.89. So there's your area of resistance. And not going to say the high of the day is in Target here, but you did fill the gap. You got a couple red candles. You're going to need a lot of buyers off the open here to get that back up to the pre-market high, but I'm not sure what the short interest is or what could be that catalyst. Kohl's, same area, gap fill from its last earnings report. Kohl's did get that on the initial surge when it went to 70.70. The gap fill on that one comes in at 70.55. So trying to keep it simple with the levels here.
Let's jump over to some of the ratings here. Not a ratings change, but probably the most interesting analyst commentary of the day is Tesla. Barclays cutting their price target from 210 down to 192. We're seeing Tesla obviously weak here for the last, well, since they came out with nothing great to say off the conference call, and the price cut down to $35,000. Stock's 281 here now. I think you do have, one initial, support 279.28, the low from the 24th. We get below that, and we're going to see this 250, 260 area again. So it's definitely, if you're on the bull camp, you want to see that low hold at least, if it does undercut it, like Gil was just saying, if we get down to 278, get back up over it. But we start getting down to 275, I think you're going to see 260 on this, and then potentially the 250 area. So Tesla not looking that great. Gets back down to the 250, 260 area, I might be interested in this though. So here you're I don't know if I can lean on that one low, the 279.28. Would you lean on that low?
No, yeah.
It's probably gonna take it out. I mean, they all take it out, right? Hit the stops that are there. Question is there like a Jeremy Newsom setup there where it goes 278, 277, then gets back up over 280, 281, then it gets interesting all of a sudden. So like that, like exactly what Gil was saying too. They undercut and then the rally. So let's see what it does at this low.
Salesforce.com goes green here.
Yeah, that's interesting too.
Yeah, I
just want to get your thoughts, Tesla, though, first, because
Tesla. I mean, I seem to get bearish at 280 and bullish at 320. So.
Don't be a Tesla trader.
Yeah, I got the trading range.
It's the ultimate chop stock.
I got the trading range down. I don't think that's one low enough to lean on here. 279.28. It just seems like there's bad news. It just seems there's a lot of news. And then when you do get some good news, when you had that 3-day run, it was quickly faded. So no, not enough here to lean on that two. Maybe to cut. If you get a look at it this morning, the cover is short, sure. But just outright long, I think you're right. I think all those monthly lows, maybe finally this time we'll get down to the bottom of the trading range, that long trading range, which is really 245, 250.
So much chop. Like you look at the last 2 years in this thing, and we've just chopped the hell out of everyone from 250 to 350. Just chop fest. It's the chop fest stock. It's gone nowhere, but it's so choppy. I mean, if you just trade in the range, I guess, it gets down to the 250, 260 area, you're a buyer, gets with a 340, 350 area, you're a seller. I mean, if you've been playing it that way, you've been able to do it a few times. Again, we've talked about the magnet trade too. It's the 300 level, it's away from it now 20 points, but it seems like it always wants to cross back over it again. I think eventually we're going to get a rally here in Tesla too. I don't know if it's going to be today or not, but you're down 10% here in a matter of, more than 10%, 40 points in 3 trading sessions. So now if you're coming in short now, you're late to the party.
All right. S&Ps, as I said, climbed back towards the high of the session here, up 350. Spencer, did we cover all of
CRM you wanted to go to because it went green. Let's go talk CRM here once again. And the buy the dippers are in these stocks. And maybe it's Kramer, Kramer's on there and he was talking this up, had the CEO there last night. And it's amazing how much, Kramer can influence, opinion. And he's the biggest Salesforce bull out there. So he's going to pop. He's not talking right now on CNBC. I'm sure he's probably going to mention if he hasn't already mentioned again this morning. But I mean, he talks the stock up continuously here and it stock's down 5 points. And last night on Mad Money, he had the CEO, and even, it's not even enough that the CEO is on. He's talking up during that segment. At the end, he's like basically saying buy CRM. So, and he was right, good call there on Kramer's part because it was 153, 154 when he was saying that. But now it's 159. But I mean, this is just one of those stocks that are very loved there, and buy the dippers just lurk below.
I got a number. Let's just call it 161 here. You had that move off the all-time high, 166.55. You hit 155.42 yesterday. Do a 50% retracement. That takes you right back to 161. So that's what I'd be using as a target. On the upside here, if you're playing Salesforce and you want to, after being red as much as it was, you want to see it hold that close, keep it green on the session. That comes in at 158.50.
There were a couple things, smaller things we didn't get to. L Brands, an activist, an activist wants them to spin off Victoria's Secrets. I think they're maybe hoping to get what happened to Gap, happened to L Brands, but it's not moving too much. Last I checked, Papa John's has settled apparently with Papa John himself. So I guess that saga is over. I saw GME GameStop had a buyback yesterday.
Oh yeah, how is GameStop doing?
Yeah, well, they said they're doing a buyback, and I don't know what $300 million buyback for GameStop, but I don't know. I'm not sure what you can say about that. That hasn't already been said, so not sure. I'm sure it's getting a pop this morning. I haven't looked at the chart, but
every pop in this stock is a selling opportunity. That's my opinion on GameStop. So yeah, you're doing a buyback, the desperate, way for a company to try to get, some love back into their stock. Is this going to turn around? I don't think so. This is another selling opportunity, in my opinion, GME. I think when we look at GME 6 months from now, it's a single-digit stock.
Okay. All right.
I don't know how I can be more bearish with those statements.
Let's just keep it on. Yeah, I mean, don't
pretty clear.
Don't mince words here, Dennis.
No, and every time we've talked about GME over the course of the last 3 years, we've been talking on the show. This is one we've had right. I mean, this, we get some things right, we get some things wrong, but we've been bearish GME forever. Since we've started this show 5 years ago, we've not liked GME. So we've been right all the way down. I continue to think that they're selling games and the whole model's going free.
Yeah, well, we've talked about it.
That's just the recipe of disaster for them.
Yeah, I mean, we've said it.
So do your buybacks, do whatever you can with the current cash you have, GameStop. But until they can figure out how to profit from free games, I'm out on GME.
Okay. If you're really looking for more on the rally here after they found that they had no strategic alternatives, you dropped from 15.50 to 11.28.
It was ridiculous. It was absolutely ridiculous. They came out on that conference call and said as much good stuff as they did, and then a week later they weren't. I mean, that was absolutely ridiculous, and I'm not going to be surprised there's some class action suits after that. So that was ridiculous, and that's the kind of company you're dealing with here now. They're desperate, and that little bit of gains. And if there was any directors that sold into that pop, and I don't know if there is or not, but if there was, I'd really be looking at that closely if I was a regulator.
Okay, all right. A little bit of a fade here. S&Ps going into the ending of the show here, just kind of bouncing around. I think we just got to stay green here. 91.50 was the close. You had that nice rally, 2,800. I'll reiterate that is the gateway to all-time highs. If we start to roll over, folks, if I'm not saying we're going to, and we take out the pre-market low of 85.25. I think things are going to get interesting to the downside. But if we can't even take out the close or the pre-market low, then just expect to grind higher. But the market proved yesterday, at least on that decline, that to find true buyers, it has to be a little bit higher than 27.90 or 27.80. But we'll let that scenario play out today.
Spinner telling us King Kong Bundy passed away. We lost Ted Lindsay yesterday, the hockey great, and today we lose the wrestling great. It sounds like King Kong Bundy. What was his move? Was it the Avalanche? Did you watch wrestling back there, Joel? I watched all the time. My dad in the 80s. I was a little kid. I loved it. King Kong Bundy and Big John Studd. And King Kong Bundy, I think, had the Avalanche. I think it was his move. That was basically jumping on somebody with his 400-pound belly and splatting them. Do you remember that, Spencer? Did you watch it?
Spencer,
I think that was
too young.
That was before
he wasn't born yet. Don't do that.
Do you remember King? Yeah, you got to watch Legacy Wrestling. Those some of the old clips. Like those are the great days of wrestling.
Right,
the Heenan family, King Kong Bundy, Big John Studd,
all right,
Ravishing Rick Rude. Remember all those guys? It's good times.
You forgot Dick the Bruiser.
Well, that's before my time because that's the 70s.
Okay.
So Joel's dating himself here. Joel's got me by about 10 years there. So
and you've got
Jimmy
me by 10
Superfly
years.
Sika, Brutus the Barber Beefcake,
Dennis,
George the
you've
Animal
got me by 10
Steel.
years.
Awesome.
Andrew the Giant.
All right.
Andrew the Giant.
Come on, Andrew the
He said
Giant.
that on purpose. He's just trying to get under his skin.
Did
you know Andre the Giant could, with a beer can, his hands were so big that when he held the beer, he could hide the entire beer within his hand.
Yeah.
So his entire hand covered the entire, a 12-ounce can of beer that you could not know that he's holding a can of beer in his hand. That's how big his hand was. And he couldn't do that. And he couldn't with the phone. Because it was back then, obviously, you had to, stick your finger in the phone and dial the numbers. He had to use a pencil because his fingers wouldn't fit in the holes.
Okay.
Oh boy,
He's so big. The eighth wonder of the world.
Yeah, all right.
Andre.
You get great information.
And the best, and he was awesome in that movie. What was that movie he was in? Remember, what was the movie?
Princess Bride. Princess
Bride. Awesome.
Great. All right.
Loved
Pre-market prep. Come for the stock market analysis. Stay for the wrestling talk. All right.
Loved. We're gonna do a wrestling show from the 80s. It'd be awesome. We could bring a couple of these guys on to do interviews. I think that would get a lot of hits.
Okay. Ric Flair.
Okay.
Ric Flair.
Okay. All right. All right. That'll do it. That'll do it for today's show.
From Mary Miller.
Thanks to everyone who joined
We're doing
us.
a wrestling show. You can chat. You want to see? We're going to do a wrestling show.
All right. Thanks to everyone who joined us today in our chat rooms. Thank you very much to Gil Morales for stopping by. Hope you enjoyed today's show. If you missed our podcast, catch it on iTunes. Or if you missed the show, catch our podcast or on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play, or watch us on YouTube. Thanks again, everyone. We'll see you on Wednesday.